I'm Clara Hermit and this is Mould on Markets, our regular look at the financial markets with Investment Director Russ Mould. Hello Russ, how are you?
I'm very well, Clara. How are you?
Not too bad
Good.
at all.
Lovely to see you again.
It's lovely to see you
Pleasure.
too. I have to ask you that question. What is it that advisors and their clients should be thinking about
Okay,
at the moment?
I don't want to wipe the smile off your face, but we are going to talk about the general election this time because everybody's eyes are going to be on the poll, which takes place in just a few days' time, Thursday the 7th of May. Now, during the spring roadshows I've done with my colleague Mike Morrison for Invest Centre, there's been lots of debate on this subject, and more than one advisor told me some of their clients had gone into cash in the view the market could actually have a bit of a wobble after the big ballot. Now, I can see their point. The upside surprise is likely to be majority government. Well, nobody's expecting one, so that's the most likely upside surprise. And if history's any guide, a Conservative win could perhaps lead to an upward pop of a few percentage points. Now, those clients who've sold the market clearly think the market could drop by, say, up to 10% in the event of a coalition or even a minority government. So looking at it in those terms, there's an asymmetry of risk, if you'll pardon the expression, with there being more potential downside than upside under those possible scenarios. Now, this is conjecture, short-term conjecture at that, but I thought it might be worth looking at prior elections and just how the FTSE All-Share did around the time of those votes to maybe give us a feel for what might happen this time.
That all sounds very scientific. What actual
It is
trends?
scientific. I've got the spreadsheet to prove it, thank you.
Okay, what actual trends have you analysed?
Okay, well, since 1962 and the inception of the FTSE All-Share, we've had 13 elections, 9 Prime Ministers. And I've looked back at the lot, all the way back to fellow Yorkshireman Harold Wilson getting into Downing Street in 64. I've looked at 3 things: how the market does in the 3 months before a poll, how the market does during the actual month of the election, and how the market does in the 3 months after the ballot. Each time, I've also looked at whether the actual identity of the winning party and the eventual Prime Minister makes any difference to how the market performs.
So you have been very busy indeed.
One tries.
I seem to remember that the market got very jumpy in 2010, so I'm guessing that all of those factors are really important.
They are, and the market's experiences last time around clearly got people thinking that it could get a little bit wobbly this time too, given the possibility we get another coalition or even a minority. Now, so the first chart behind us here shows the FTSE All-Share month by month back in 2010. And you can see from the highlighted column in the middle that the FTSE All-Share fell by 6.6% in May, making it the worst performer of the year by far. Now, the second chart shows May 2010 day by day. Sorry to be a bit spoddy about it, but this is quite important. The first highlighted column is May the 5th, the date of the poll. The second is May the 10th, when rumours of Gordon Brown's resignation began to circulate. That's probably why the market went up. Sorry, Gordon. And the third is May the 12th, when the coalition agreement was sealed between the Lib Dems and the Conservatives.
Okay, so I need to ask you, how does all of this look if we go further back?
That's a very fair question, because in the end, let's face it, investment is a long-term business, right? Not even a 5-year one. So the first chart here shows how the FTSE All-Share's performance ranked month by month in any given election year. First means it was the best performer, 12 the worst. And there's no great pattern, even allowing for party allegiance to the Prime Minister. So we can probably, hopefully park that one.
That's the monthly rankings, but what really matters to the clients is absolute performance, surely. So what do the numbers look like there?
Yeah, again, that's a perfectly fair point, and luckily, I'm ready for you. Absolute performance and over a long-term period, not just a few weeks. The next graphic looks at the All-Share's performance 3 months ahead of the election. On average, the market's dropped by 1.2%, but ahead of a Labour win, the average fall was 6.7%, and ahead of a Tory win, there's an average gain of 4.8%, intriguingly. Now, the next chart shows the market's performance in the month of a ballot. It's actually all pretty quiet, I guess makes sense given the uncertainties, with an average gain of 1.5%. And that's a 0.8% advance under Labour and an average advance when the Tories win of 2.2%. Finally, the figures for 3 months after an election show an average loss of 1.3% as the market digests what's going on, an average drop of 2.8% under Labour, and an average gain of 0.5% under the Conservatives. So quite a big difference between the performance of the index according to who wins.
So the market does seem to prefer a Conservative win.
It does, and that's what the data show. It's not an expression of personal preference or indeed one on behalf of AJ Bell, but all of this also must be kept in context. Profits and cash flow are the ultimate arbiters of company valuation and determinants of performance. Now, yes, government policy can affect these, and a number of sectors could well become political footballs depending who gets in. In fact, they're probably all going to give a bit of a bashing to banks, tobacco firms, utilities, bookies, rail operators. It's quite a long list. All could come under scrutiny, pay more tax, or both. Now, in the long run, the FTSE All-Share's 3% plus dividend yield means UK stocks effectively have a duration of around 30 years, because that's how much it's going to take for them to deliver all the cash. So under those circumstances, a 5-year government term in office does need to be kept in context.
Okay, thank you, Russ.
Pleasure.
Thank you to you for joining us, and we'll see you next time. Goodbye.